Well, we believe that Powell or Brainerd wouldn't have made much of a difference, in the meaning that if Biden was selected Brainerd, we would have expected low interest rates for longer, which would have increased the inflation expectations. And at the end of the day, it would have led the Federal Reserve to be aggressive in tapering and also accelerate interest rate hikes at a later point in the future. Biden, by selecting Powell, has made the anti-inflation choice, meaning that Biden sticks with the monetary policies of the Federal Reserve has been applied until now. And we have seen a recent tilt towards the hawkish side of its members, meaning that we will see an acceleration of interest rate hikes pricing in the market, which ultimately means we will see the yield curve there flattening.
Is the market wrong at this point? 3 to 4 rate hikes next year that's starting to get priced in by some market participants would suggest a rapid lift-off in rates on the back of a very quick taper. What scenario would lead us down that pathway?
Well, obviously, it will lead us that way if inflation remains supported, which we believe that is going to be the case. Inflation is going to correct next year, but is going to remain much higher than what we are accustomed to. And that is going to require some tightening from the Federal Reserve. But at this point of time, the really concerning thing in the bond market is seeing the 10-year yields not moving from where they are. We believe that they are compressed because of the debt ceiling crisis. And once that problem has been resolved, they are going to move higher. And at that point, is going to pose a threat to risky assets, especially equities.
How much higher are you calling the 10-year yield then? Because we already saw a wobble in the markets yesterday around the technology names.
We believe that 10-year yields will need to rise comfortably above 2%. We had a 2% target for this year, but with the debt ceiling crisis, obviously that has been postponed. It's very likely that in the first quarter of next year, if we continue to see interest rate hikes accelerating, we will see the 2 years being tested on the first quarter of 2022.